in my humble opinion, unless you're doing this day in and day out, it's really hard to keep up with what those nuances are.
That's why I stopped filing taxes.
That's the only reason.
Well, no, that's not the only reason.
Welcome to the Physician Sense Podcast, a podcast designed specifically for physicians, offering a breakdown of complex financial topics to help you develop your financial IQ, further your financial journey, and improve your well-being. Whether you're a medical student, resident, fellow, or attending physician, you're sure to learn something new that will benefit your journey. And now, your hosts, Chubb and Tyler Olson.
Welcome to another episode of the Physician Sense Podcast. We have a fabulous guest with my fabulous co-host, as always, Tyler Olson. But we have the wonderful, world-class, one of my favorites out there, Dr. Stephanie Pearson with us today. We will talk disability. She is the CEO, co-founder of Pearson Rabbits, which is a very well-known firm throughout the entire physician community. So I know this is not a new face, but if it is, you're going to learn a lot today. So Stephanie, thank you so much for being with us. Tyler, as always, thank you, my friend. But we're going to give the spotlight to Stephanie here today.
No, thanks for having me. I'm honored to be part of the podcast and helping you guys out any way I can.
We hear nothing but good things about you and your team, and we also really appreciate like where your mind goes in terms of this. If you don't mind, on that note, we'd love to hear and love for you to share, like, why is Dr. Pearson a co-founder of a disability insurance agency?
Right. So not the initial life plan that I had. Admittedly, I thought I was going to be like 80 years old in the OR and a nurse was going to lean over and be like, "Hey, Dr. P, it's time." I would throw my last stitch and have a massive MI at the table and like die in this like grand hospital setting, right? However, as most of us know, that sometimes life plans get a little side railed. I was turning 40. I got called down to deliver a precipitous delivery. So patient came in, advanced dilation, unable to get an epidural or pain medicine to help with labor. And it's called labor. It's not called a walk in the park. And so, unfortunately, she was in a lot of pain, and I had multiple nurses in the room trying to help me position her in a way that we could have a safe, happy, healthy delivery. And as we were getting her in position, I looked over and the fetal heart monitor, which measures the baby's heart rate, dropped really low. It was in the 40s and normal should have been way higher. And so I knew I had to get this kid out. And fortunately, the baby's head was right there. And so I had nurses holding her legs back. I had a vacuum to put right on top of the baby's head. And as I was guiding the baby's head out, I got kicked the first time, came straight to my brachial plexus. My arm went numb. I thought I was doing myself a favor by turning my body. And unfortunately, when I got the widest part of the baby's abdomen out, I got kicked a second time and it kind of came across my shoulder. I heard a pop, started to cry, but was able to finish the delivery safely, baby and mommy fine. I got to call in one of my senior partners to finish because just getting the baby out isn't the whole delivery. And I knew something was wrong. And I initially got diagnosed with a torn labrum in my left shoulder. I was told that professional baseball pitchers pitched with torn labrums, so I should be able to do my job. So I did what most type A physicians do. I put my head down. I figured out how to compensate until I couldn't. In that time frame, I developed a frozen shoulder or adhesive capsulitis, met a new doctor who said, "Don't worry, we'll operate. We'll have you back to work in 12 weeks. And that was almost 11 and a half years ago. So I have considerable range of motion deficits in my left arm. I have nerve damage, chronic pain. I was never cleared to do the OR or OB. And I actually got terminated the day my FMLA was up because my contract said I needed to do 100% of my duties. And my treating orthopedist had actually put in black and white that I was a liability. And so malpractice insurers said, we'll pass. And then I learned a lot the hard way about disability insurance. The group policy that we had through our hospital, turns out in fine print, didn't cover work-related injuries. I was flatly denied and told I would have been better off had I fallen off my bike. And then workman's comp denied my initial claim because they said while an injury occurred, my frozen shoulder was idiopathic or my fault because I worked while I was injured, even though that's what the first doc told me to do. And I also came to find out that my private disability insurance that I thought I did the right way, I just didn't out of sheer ignorance. And so I started really just burying myself in the information. And it actually wasn't the first thing that I thought of. I did medical malpractice defense work. I did medical editing. I did biotech consulting. But I had started speaking to area residents about my story and really the mistakes that I made, hoping that they wouldn't make the same ones. And it was really my husband that said, maybe this is something you should be doing. And I thought he was crazy. I was like, I'm not an insurance salesperson. I'm a physician. This is the most ludicrous thing I've ever heard. And then we really sat and thought about it and figured maybe this is what I'm supposed to be doing. And so I locked myself in my room with all my colored pencils and pens and studied and took the test, and the rest is history.
Now you're not just talking the talk of like how to do it, but you're actually helping your younger colleagues, other people in medicine, to be able to protect themselves as best as possible. Wow, man, that's been a lot going on the past 10 plus years for you.
Yeah. And, it's been exciting though. We started at our kitchen table and now we have a brick and mortar and we have almost 25 full-time employees. And what started as me lecturing in and around Philadelphia, now I get to do it around the country. And I really, without sounding trite, I really am trying to help as many people as I can. And not just on the front end, but even more so on the back end. When I got hurt and needed help, my broker was really not invested and basically said it's between you and the carrier. And I also wanted to change that. And so any of our clients that have to go out on a claim, I speak to, they get my cell phone number. I help them, put everything together that they need to get. I give them some insight into what it looked like for me, things that they can expect. And even like simple things like start getting all your medical records in one place, because that's one of the biggest hiccups is getting medical records. And I make sure that I check in on them periodically and really make sure that kind of the back end, they feel supported.
That's great. I would say that's probably unusual because, I don't know if this is part of what you were thinking about when you said trite, but when we're in business, we earn a living, it can feel like we can't say that we're trying to help people because money's involved. I think that that's ludicrous. And of course, and I agree with you, but the way that financial and insurance incentivization happens, it's not something that easily everyone, you get paid on the front end, right? And so if you build it into your process to be supportive on that, when those things do happen, that shows, that's a real demonstration of loyalty. So that's wonderful.
Well, thank you. And we also were very intentional that all of our salespeople are salaried. So the company gets the commissions, right? So for those of you out there who don't know this already, insurance companies pay on commission. That's just the way it is. And I never wanted anyone to question our ethics or why we give the advice that we give. And so our producers are salaried. And part of that was because I didn't want anyone questioning our ethics. Part of it was we've created an internal machine. And so there's only so many of us who are technically bringing in money that have to pay for everyone to do their job, because at the end of the day, we can't do it by ourselves. And so that was something that I felt really passionately about.
Yeah, that's great. I think like as a business owner, and I'm sure you agree, Chad, like they're always thinking about like, yeah, like we need to make it work financially from a business in like an internal business standpoint. It's a constant conversation I'm having with myself.
Yes, as are we.
Stephanie, one of the things you said early on, and it's I always note this when we're even talking about disability to our physicians and type A physicians, and I think a lot of physicians are type A, and it always brings me back to, and it's a good pivot point in terms of why is true ONOC so important for physicians, and I always come back to that type A because some of the not great definitions of disability are like, sure, if you want to sit around on the couch and eat bonbons for the rest of your life, you can, and you'll get paid that number. But it's very unlikely for most physicians. You already had so much motivation to go through school for how many years to just like, all right, well, I guess I'm just going to sit around and be disabled now and not get back to work. Where hopefully there's a recovery, and even if it's just kind of a pivot, where maybe you're not doing clinical work, but now you're teaching.
Mhm.
Can you explain, especially where, and that's why I think your story is so powerful, why most physicians, if not all physicians should only be looking for a true ONOC policy, and what does that even mean? Because that's one that us three will throw around because it's common knowledge. But for someone either just looking for a policy or someone that's maybe had a policy for 10 years, not even knowing what that means, what does that mean and why is it important?
So I tend to say specialty specific instead of own occupation, just because different carriers use different phrasing and they can define it the same way, or they can use different phrasing. Different phrasing, define it the same way, same phrasing, define it differently. And so there's even a little bit of a lie of omission that happens in some group policies that say their own occupation. So, kind of taking a giant step back, what is so important is that physicians are covered for what it is they do day in and day out. And if they can't do that, that they're considered disabled regardless if they're gainfully employed in another occupation. And what we find a lot is something that I guess I call it modified ONOC, where it'll say its own occupation, but when you look at the definitions, it may be that its own occupation for a couple of years and then it switches to any occupation. You also have to be careful how they define own occupation. So, on the one hand, a lot of group policies will say what's called held to the national economy or the local labor market. It's not specific to what one employee does at one employer site. That allows them to cast a really wide net that says this is what you would, could, should be able to do based on your training, education, and skill set. I'm an OBGYN. I don't want to be compared against 100 OBGYNs. We're not practicing the same. We're not making money the same. I want to be compared to me. And most of those group benefits will also define total disability as the ability to not, or the inability to do your job as they've defined it and not be gainfully employed, which is where you were going. And I often say, I used to actually say the old adage, I'd give my left arm to be home with my boys more, who were 4 and 6 when I got hurt. Turns out I gave my left arm to be home with my boys more. And after 6 weeks, I was ready to kill everybody. I have the utmost respect for stay-at-home parents. I'm not hardwired to be one. And there was no way that I was just going to sit home for the next however many years I'm alive, right? And I don't think that we should be worried about losing any or all of our benefit while we're trying to be productive members of society.
Well said. Yeah, that's. I just don't. I mean, we could even make an argument that there's a lot of financial advisors that don't even know how detailed disability insurance is. And I think I shared this with you before too. That was one of the reasons. If we go back 6, 7 years ago, like we used to sell disability inside of WealthKill, we would sell disability insurance, term life insurance. And then as time went on and the more I learned and kept learning throughout that time, like there are so many unique things. And then, we go down a whole rabbit hole of GSIs and, this rider and this rider. Well, this rider just changed and this definition of ONOC just changed. There's so many unique parts to it. And it's so important, as you just walked through in your story, on that fine print is so vital to the policy ever paying out when you need it the most. And that's, this is just one of the main things. We can, probably talk riders for days too, but I think that's really important to start with because, that's really the main thing you're looking for in that initial conversation of disability insurance.
Exactly. And to your point, it's not a huge playground. There's 5 what we call traditional carriers that cater to the physician marketplace that give the right definitions. The language is appropriate. The issue is they change, right? It's a fluid market. And every couple of years, they change their product designs to be more competitive or to change who they want on their books, right? There's also the companies have to do their risk mitigation, and I appreciate that. And so, unless you are doing this, in my humble opinion, unless you're doing this day in and day out, it's really hard to keep up with what those nuances are.
That's why I stopped filing taxes.
That's the only reason.
Well, no, that's not the only reason. But no, yeah, I get what you mean. There's so much to the, like, to drill down, and like it's a value to be able to work with someone that just does what you do.
That's what I think.
Yeah. Oh yeah. No, I never sold disability insurance directly, but I would have absolutely done the same thing that you mentioned that you did, Chad. Like it's such a diversion from the overall financial planning process and like investments and it there's so much to be done that can be done. And if we try to do everything, we end up being terrible at most of it. So.
And for smaller practices too, I think, Stephanie's team being the size that it is now and growing rapidly, right? The underwriting process from our side of it as an advisor, where we want to focus on like the financial plan and piecing everything together, it can take a toll. Like you think you submit an application, right? It's like, here you go. Here's your policy. Thanks for sending us that. There are so many like, okay, what about this? Oh, well, here, well, let's go ask the doctor or the doctor's office. Well, they're going to wait 30 days because they always drag their feet to 30 days. Well, they didn't send it still. Like there was so much hand-holding in the underwriting process that at a point I'm just like, unless you have a large team and that's your primary focus, not even the expertise in disability, just the underwriting process was more than enough for my small team to handle. So there was a lot of reasons, but I'm sure Stephanie and the underwriting team probably has fun stories of how some of those cases can just take forever to get through, if they get through.
People ask me, how long is this going to take? And I'm like, look, if I had a crystal ball, my butt would be on an island getting a suntan. I can give you kind of the average, but it all comes down to what they find. And it's pretty invasive. They have access to medical records, pharmaceutical records, motor vehicle records. I remember the first time that I got a note from an underwriter that one of my clients had a DUI. And at that time, I didn't know what the ramifications were. So it was very early in my career. And now that's part of the question set that we ask. We try to do as much field underwriting as we can. Partly, again, going back to my situation was I felt like I had not been properly educated. My expectations weren't necessarily realistically set. And so I don't really like surprises. And so I try really hard within our system to set realistic expectations. And so we do ask a lot of that stuff up front. And so do we still get surprises? Sure. People forget about something that happened 5 years ago or, didn't think something was a big deal. But we tried really hard to get all of that information up front so that people are walking into this eyes wide open.
Hmm. That makes me think of an important reminder for everyone then, and that is that if like working with you or any other reputable agent in disability, to be forthright and not just about it's not just about honesty, but about not trying to minimize anything health wise that may have happened in the past. Is that accurate? Like just when in doubt, bring it up.
Yes, I tell people often that there are no secrets. I truly, and I hand on whatever you hold holy, don't know how they get all the information that they get, but there's no time limit on fraud.
Mm.
And so I tell people sometimes it's frustrating because when we think about things from a community medicine standpoint, they really don't matter or matter a lot. But then you look at insurance medicine and it's very different. For instance, cardiac echoes, one of the banes of my existence because so many people that get echoes end up finding out that they have mild regurg of one of their valves. Community wise, doesn't really matter, isn't really going to change how your cardiologists treat you. But from an insurance standpoint, it's a big deal and it adds a significant cost to the policy. And, physicians will fight back. And I have to remind them that not every 32-year-old has had an echo, right? We're all healthy until we go to the doctor. And so, you know, you had an echo for a reason. You didn't just show up, right? So either you complained of palpitations or chest pain or some other issue, but there's a reason that you had the test. And so the carriers have to do their risk mitigation. And so kind of finding that balance between community medicine and insurance medicine is sometimes less than easy.
Interesting. I've got a question for you, Stephanie.
Mhm.
Obviously, I can tell that you and your people do a good job of trying to educate clients that come to you. But if someone say someone goes through a process with another agency that does not educate them on the process and they just give them, hey, I think that you should get this Mass Mutual policy. Here, take a look at it. And it shows riders, it shows all sorts of language and everything. How would you advise someone like that to begin to understand what they're looking at and what they should be looking for as far as like good things that they red flags? What would you say to someone like that?
So just to be clear, is this somebody who's already gotten a policy or somebody who's just looking for a second opinion? Because they're a little bit different.
Just someone that's looking for a second opinion. They haven't gotten it. They haven't gotten the policy yet, or they haven't purchased it yet.
Yeah. So, I mean, I kind of treat that person the same way I would treat any new potential client that comes in. And so, it's kind of starting from the beginning and making sure that they understand what they're looking at. I have on occasion, not infrequently, said to somebody, look, this looks like a good policy. It's up to you who you want to work with, right? I've also said, this policy is missing XYZ. Here's why I think it's important. We run everybody through all 5 of the traditional houses and tend to go over the 3 that are pricing the best. That's about where I have seen people's bandwidth before they kind of want to poke their eyeballs out, right? I mean, insurance is not exciting, right? And so, we try to find our sweet spot where we can educate and make certain recommendations based on someone's personal situation, because a lot of the little nuances that happen amongst the carriers something may be really sexy for one person and not at all for another person. And I'm always saying it is not a one size fits all at all. And I tend to be a little bit weary if somebody comes to me and says they've only been shown one option.
Mm. So that would be one red flag, is like if they're just given one option, be like, here, check out this policy. I think you're good to go. Yeah. Okay. Are there any policy riders that you think most people don't need?
So I'm probably going to get a lot of flack for this, but the student
All right,
loan,
let's hear it.
yeah, the student loan repayment rider,
Mhm.
I think is predatory, actually. Uh, most people that I've spoken to that were sold it from somebody else were actually not informed, or I wasn't there, so I don't know if it's just that they weren't informed or they didn't hear it or what have you, but they don't realize that it's a term rider. So while the policy is going to protect you until you're 65, 67, however far out you push it, the student loan rider is a term rider. It's actually only good for either the first 5 years or the first 10 years that you have the policy, and then it actually falls off. And if you look at actuarial data, which is very hard to get from insurance carriers, but the average claim isn't made until somebody is more than 5 or 10 years out. So, like for me, if I had bought that rider, it would have fallen off my policy before I went on claim. And so that's why I think it's a little predatory. So that's one. When we talk about the catastrophic benefit, which is a benefit that's additive, so it's an additional benefit if something really horrible happens and you're left unable to perform two or more of your activities of daily living without assistance, or you're severely cognitively impaired, you get a second benefit. So if we say X is your monthly benefit, Y is your catastrophic benefit, something really bad happens, you get X plus Y. I think that's one of the more hotly debated pieces. My feeling is I'd rather have it and not need it than need it and not have it. However, if I'm speaking to a more experienced physician who's playing catch up and the policy is really expensive, some people will advise to drop the monthly benefit to keep the catastrophic benefit. I actually believe the opposite. I want to see them maximize their monthly benefit and potentially drop or let go of the catastrophic benefit. Because again, if we look at actuarial data, they're more likely to need their monthly benefit than they are the catastrophic benefit. So I want to see them max that out.
I'm curious, what compels someone to think that they should prioritize the catastrophic benefit? What scenario are they envisioning that?
Strokes, bad car accidents, if there's a family history of dementia. I mean, there are times and places for it.
Mhm.
And again, people come with all sorts of questions. And so part of what I view as our job is to get to the bottom of why do they feel that way, right? Why are they thinking of making the choices that they're making? And then trying to make sense of that and how we want to proceed moving forward.
So the only time you'd rather really see that, though, right, Stephanie, is what you said, is if the premiums are coming an issue, you're almost, I don't want to say making a bet, but you're trying to like leverage your bet per se, that it's going to be something catastrophic and you're going to get more bang for your buck because the base benefit is a lot more expensive than a catastrophic rider.
Correct. And there are some people, I actually, for the first time last week, had this happen where somebody came back and said, look, I am at the point financially that if something kind of average happens, I don't really need my monthly benefit. But you know what? If something catastrophic happens, we're in trouble. And because it's a rider that you have to add in, you can't just have a catastrophic policy.
Yeah.
But you can drop the monthly benefit down really low and still maintain a big catastrophic benefit. And it was honestly the first time in almost 8 years that somebody wanted that, because they were really saying, like, look, if I get in a really bad car accident, if I have a stroke, if I have, a horrible ski accident and I need help getting around, getting dressed, feeding myself, that's a financial burden that we're not necessarily independently wealthy enough for.
That's an interesting planning technique, actually. Like, I'm thinking for when those clients are financially independent, they're like, listen, I don't want to become disabled, but heaven forbid I did. I don't need that policy anymore. But to your point of what your client just went through, right? But if something really bad happens, I would like to have a little bit extra, and we're paying a fraction of the base plan. That's
Right.
that's an
So we
interesting, even from our side, a planning technique. That's interesting. I like that.
so we did it. We dropped her monthly benefit to $500 a month, and they let us keep her catastrophic benefit, which at the time was $8,000. And she's happy, and I'm happy for her, right? Like, ultimately, I want to do what makes our clients feel comfortable and being able to go to sleep at night and get in their cars in the morning. And I do remind people that I am not a financial advisor. So I have been known on occasion to have people check in with their financial advisors before they do what I recommend.
Hmm.
That's
Yeah.
that's a good one. That's a good. I'd love to hear what their financial advisor said there, because that's interesting. That's a unique way to look at it. Again, especially for that like group that's already hit financial.
She was told to drop her disability insurance, but see if she could have a catastrophic policy.
I like that.
Yeah. I've heard too that and I was curious on your take on this, Stephanie. If someone either has an inkling or they know with some reasonable degree of certainty that them getting a guaranteed standard issue policy, a GSI, is going to be their only option, that they should also opt in to the catastrophic rider at the time of application.
I think so. I mean, let's take just one quick step back, because I've started getting this question and I'm not sure where it's necessarily coming from. But the majority of GSI policies, which are policies that don't require medical underwriting, are limited to trainees. I've recently started getting attendings who have asked about GSI policies, and they are almost non-existent. I can think of one off the top of my head where attendings can do it, but most of the time that product is available for residents and fellows. Now, some people will say, why wouldn't everyone want to get a guaranteed standard issue policy? And there are a couple of reasons. One, they do tend to be a little bit more expensive. Two, the maximum benefit for the entire policy is lower. So most of the carriers right now will get you to $20,000 or $30,000 a month of benefit if the math works. Most GSIs are going to cap out at 15,000 or less. They only offer 2 years of mental health and substance abuse coverage, and there are people that care very deeply about having mental health coverage for the life of their policies. And sometimes they don't have the catastrophic benefit even available. So some do, some don't. And it really comes down to what's the basis for getting that GSI, right? And for most people, not all, but for most, it's because they would be hard to insure or impossible to insure by a traditional carrier, where this is the best that they're going to get. But then we also have the continuing conversation of, at some point, we may need to layer in a traditionally underwritten policy if you end up qualifying for more than what the GSI is allowing for. And again, that's for somebody who may be looking at a bunch of exclusions or things that they're not going to get covered. And then that way you risk mitigate with, here's policy A that I know I'm going to get paid no matter what happens to me. And here's policy B that as long as none of this list happens, then I'm going to get more. So I would say it's really interesting. A couple of the carriers have really started to move away from the GSI space. And a couple of carriers just came out at the beginning of the year with brand new lists of where they have these policies. And so I always tell people, if you're even looking at a singular exclusion, it's worth seeing if there's a GSI available at your institution. Now, we have access to a lot of GSI policies. We keep or try to keep a running list. We have a master GSI policy list so that if our clients come to us and we don't know if there's a GSI and then they find one, we ask them to give us the contact information so that should somebody else come from their program, we can educate them and then say, hey, look, I don't have the keys to the castle. Here's really who you should be talking to.
Yeah. This is really good insights. Thanks for sharing.
Thanks, I try.
As is the case, Chad, I just thought of a question that isn't on our list that we hadn't talked about. And but I hear this a lot from non-proceduralists. Why should they get disability insurance? They think, from what they've read and like what they hear from other people, that people that are not proceduralists, it is substantially less value.
So I disagree. We've had almost 50 clients go out on claim since we started, which I realize is kind of small, but I thought that was actually a lot. And a small amount are proceduralists. People tend to forget that illnesses don't discriminate. Cancer doesn't care if you're a proceduralist or not. And undergoing treatments for cancer cause fatigue. People can't work as much. People forget that injuries are on the rise. They don't think about traumatic brain injuries. You know, one of our former employees was another disabled physician who was helping a neighbor shovel snow, and an ice-laden branch crushed him. And he has diplopia. He has some higher functioning, like monotasking, brilliant, but he can't multitask. And that's hard not to do when you're a doctor. You know, there are so many things that take people out of practice that aren't just involving our arms, right? I'm always surprised when people say that. And then I come up with like 10 things and I'm like, I'm not trying to be a fearmonger, but this is the truth. I mean, I've had 2 psychiatrists, and I would say psychiatrists push back a lot on disability insurance, right? Because they're like, I'm just talking, right? 2 of them who have had traumatic brain injuries from totally random things that can't practice anymore, right? And so, you know, look, I think everyone who depends on their income should have a strong disability insurance policy. If you can wake up tomorrow and say, hey, I don't have to go to work if I don't want to, well, then congratulations, you've won the game, and cancel a policy or don't buy one. But if you still need that paycheck, you should be covered, because there are a million and one things that take people away from practice.
I was going to say psychiatrist. That's always well, if I have a brain chat, I can still do my job. I'm like, yeah, but things can happen to your brain too, as you just gave us good examples. But that was the one I was going to use as my example, because they're the ones that always give me the most kickback too on that.
Yeah.
Well, I think that this is probably a good place for us to stop talking about the minutia of disability insurance. I personally could go on and on because I find it very interesting, and I think a lot about Chad and I, we both, well, I'm sure you'll agree, Chad, when I say that a loss of income, that risk is something that we want to do anything that we can to support physicians to protect or to cover, because there's no amount of wealth that can replace a lost income when you've got 20 years in front of you of like earnings that you were going to have.
Yeah.
So I love the minutia of it, but I really appreciate what you've shared with us so far. I think that it's really good insights for everyone who's listening here today to be able to enjoy. But we'd like to make sure that people know where they can find you, because like we know that you do good work. How can other people find out the kind of work that you do?
So our website is pearsonrabbits.com, and there's a ton of educational material that you can access through the website. You can call the office. Hopefully you guys will put all our contact information. My email is stephanie@pearsonrabbits.com. My Facebook, my Instagram, my LinkedIn. I think I'm actually more accessible now than when I was probably practicing.
Awesome. Yeah. I feel all the more reassured of like why we have been able to send people your way. Cause like, it's like we were saying before, like we all can't do everything. We all like, I can't possibly be the expert in what you and your team do. And we really appreciate that you're advocating for physicians in this space.
I'm trying.
And it's really, and things you shared today, I hadn't thought of before. I'm going to be mulling over it now.
Okay. I'm happy to come back anytime. Obviously, I could talk about this stuff till I'm blue in the face. So,
yeah. Any parting words, Chad?
Yeah, I just want to give a shout out because this will come out in a few weeks, months based on a recording schedule. But Stephanie's a big Eagles fan, and last night was Super Bowl Sunday, and
Go
she didn't
Birds.
ask for delay. She was on time. She's ready to go. I asked her if she visited Broad Street last night. She said no, she took it easy. The boys still got to school, she said. So I just want to give her an extra shout out to seeing her Birds win the Super Bowl and still being here, ready to rock and roll, full of energy. That's why we love Stephanie. So we very much appreciate you being on here, Stephanie.
I appreciate you guys.
And you're one of the rock stars out there, and one of the ones that we know and trust for many years. So it's nice to be able to get you on here. But thanks for hanging out with us for a bit as well. It's awesome.
Thank you, guys.
All right. We'll see you soon. Have a great day.
Bye.
This information is for general purposes only. This information is not intended to be a substitute for specific professional, financial, or tax advice, as individual concerns vary. Please see a financial professional, CPA, and/or an attorney in regards to your own individual situation. Wealth Fields Advisory Services and Financial Planning offered through Vicus Capital, Inc., a federally registered investment advisor. Olson Consulting, LLC, offering advisory services and financial planning, is a state-registered investment advisor.